Hello everyone. I believe that we have read enough news regarding the surge of commodity prices recently, which is one of the major reasons to tank the market. Will the commodity prices continue to rise, or has it reached the top? This year has a bad start for stock market. SPY entered bear market. When general market are dipping, we know that most stocks are dipping. Many stocks, especially speculative growth stocks, already crashed 80 to 90%. The exception was commodities-related stock or ETF. For example, XLE, an energy ETF, which is closely associated with crude oil price, it surged for almost 68% when the major market were entering bear market. Not only oil stock, many commodities have seen their value sharply increasing. While the commodities continue to run, in this video, I will share my analysis using stage method, which show that the commodity run is most likely over. There are a few reasons on the surge of commodities price. First, Russia-Ukraine war. The oil price jump was largely attributable to the market's assessment that sanctions are to be placed on Russian energy exports. The crude oil price was increasing almost 1,900% since the COVID-19 low. Second, Russia and Ukraine supply roughly 30% of the global wheat export market, while Ukraine supplies roughly 17% of global corn exports. Export disruption, combined with the expectation of lower crop yields in the Ukraine, has contributed to wheat and corn prices surging. We could also see that wheat price based on Chicago SWR wheat future has also increased almost 200% when it reached the top on 7th of March 2022. Third, for the fuel price increases is because lifting of COVID-19 measurement which increased the demand of travel. There are other reasons such as supply chain disruption, etc. that also causing the rise of commodity prices. The direct impact of the rising of commodities price are the inflation. Look on the US inflation rate data. It has been keep increasing since October 2021. Then, Fed was removing the liquidity from the stock market by tightening the monetary policy to fight inflation and high prices. When Fed is removing the liquidity from the stock market, the stock price would plunge. Fed would keep increasing the rate aggressively as long as the inflation is still out of control. More rate hike, more liquidity is removed. The market will be lack of catalyst to recover from the bottom or even continue to plunge. Thus, it is important to monitor the commodity prices. Some reports even mentions that time to buy commodities and to trim stocks recently. The date of this report is 9th of August. However, I'm having the total different perspective. Based on the stage analysis, the chart told me that the commodity bull run is over. Disclaimer, my video does not provide any advice on buy, sell or hold on any stocks or derivative mentioned in the analysis letter. First, let's look on the crude oil future weekly chart. The first step is always pull out the weekly moving average 30. It is very clear that stage 2 bull run started in November 2020, where the stock closed above MA30 and MA30 starts to sloping out. Recently, the crude oil price closed below MA30 and the MA30 start to flatten. In addition, do you notice that the change of slope for the past two tops, the crude oil also failed to achieve higher high. The patterns looks like a double top pattern. Moreover, we could see that now MA30 has become a strong resistance to the crude oil price. It has rejected the price twice. All of these observations suggest that the stage 3, the topping phase, is formed. The current support is at $85 to $88. If it breaks below $85, it will be very bearish and we shall anticipate a stage 4 crashing phase is coming. However, also take note that the MA30 is still sloping up, thus it may still, although to me it is less likely, to break above moving average 30 and a new phase 2 advanced bull run starts. Please watch my previous videos on stage analysis if you have not watched them yet. Next, let's look on the wheat future weekly chart. It was in a nice uptrend since August 2020, where the price was traded above moving average 30. When the Russia-Ukraine war started, the price surged for almost 70% within 1 week. Then, do you observe the similar pattern to the crude oil chart? First, the price is now close below moving average 30. Second, the change of the sentiment was slow. Third, failed to achieve higher high with a double top pattern formed. In addition, the moving average 30 is clearly flattened. All of the above observations suggest that the wheat is reaching the stage 3 topping phase. I anticipate it will go to phase 4 crashing phase soon or later. Furthermore, if we look on GSG, iShares S&P GSCI Commodity-Indexed Trust, where it exposed to a broad range of commodities, has also closed below moving average 30. It further suggests the commodity bull run is over. Future contract is a lot volatile and need more skill to manage. The risk is a lot higher if we do not know how to manage the future trades as well. Thus, instead of buy or sell futures contracts, we can buy or short sell the ETF that tracks commodity instead. Here are lists of commodities ETF provided from Seeking Alpha. If we look on some of the charts such as GLD for gold, corn, JJC for copper, BBB metal fund, they are all close below moving average 30. If only one or two of the commodities fall below moving average 30, it may not so convincing. But now it is the broad commodity market, and almost all commodities are closing below moving average 30, which further suggesting the commodity bull run is over. This will be definitely a good news to stock market, as this would slow down the Fed to continue removing the liquidity. This is an important turning point for Fed to start to pump the liquidity back to the stock market again. Okay, that's all I would like to share in this video. Do you have any commodity that you would like me to analyze in details? Let me know in the comment. Before you go, please like my video and subscribe my channel. Thank you and see you in the next video.